Nvidia just dropped a $279 billion supply chain bomb on Wall Street, confirming that memory and not compute is the single biggest bottleneck in artificial intelligence. Yet today, memory stocks like Micron, Western Digital, and SanDisk, they all jumped at the open only to be slammed red by the close. If you were watching Micron drop over $60 from its pre-market highs and worrying that you may have bought at the absolute top of this memory cycle, I need you to stop right there, because we're going to discuss the clear signals from today's market. We're going to talk about why Nvidia's massive quarterly jump in supply chain commitments and what that means to pricing power for DRAM and HBM. We'll also discuss why AWS adding 2 million GPUs and custom HBM to Trainium, how that expands the memory demand instead of crushing it. We'll highlight what exactly happened today with Micron when we take a look at their intraday tape and how this price action actually evolved throughout the day. And finally, let's discuss why SK Hynix spending billions of dollars on new fabs won't save Wall Street's problem that they have right now, which is the memory bottleneck. It won't save it anytime soon. That's what we're going to discuss in tonight's video. We're going to get right into those stories, but if you haven't done it already, guys, make sure you hit like to this video and subscribe to the channel. All right, let's get started. Let's take a look at what Micron actually did today. Let's take a look at the tape. You can see Micron actually finished down by a little bit over a quarter percent. It was down $2.50. We know it was down significantly more than that throughout the day. If you look over to the right, you can see the day's range. It ranged today from about 906 as the intraday low up to about almost 969 is the intraday high. And I'm going to get into that and show you the candle pattern chart. But take a look at the after hours. Right now, we're seeing continued pressure on Micron. It's down by about 1%, $11, trading right in that 925 range. They weren't alone today. If you look to the right, you can see SanDisk was under pressure. SanDisk was down today by about 0.96, Western Digital about 1.5%. But we did see a decoupling today with Seagate was up just about 80 cents, and SK Hynix, their ADR, was up today as well. And we know that both SK Hynix and Samsung were significantly up in the Kospi. We can take a look right now, actually see how they're trading. They're actually down right now in today's market that's happening right now in the Korean index. So they're down right now. We'll see what type of momentum that has for us as we move over to our opening bell on Friday. But let's take a look at the candle pattern chart. You can see here, as I called out, we had a significant gap up right out of the gate. You can see we had that kind of pre-market momentum that was starting. And it looked like we're going to have a significant day today. The stock gapped up right away, got to 968.68 today, only to be followed immediately by heavy institutional sell orders that hit the tape. It drove the stock all the way down. You could see to the intraday low today, which was 906.95. So that was a swing of about $60, 6% overall for the stock in a very quick period of time. And you can see right about that time frame, the RSI, if you look below in that purple line, it actually dipped below the 30 and got into this deeply oversold territory. So at that point, I think it was clear that institutional profit taking had cleared for this stock. The buyers stepped back in, and it steadily started grinding back upwards. The stock got to 933, and ultimately it closed at about 935 overall, with some really nice last few candles you can see over here on the right that are circling, with a nice kind of green volume underneath that just drove it up in the last 15 minutes of action throughout the day. So that's what we saw today. And as I mentioned earlier, this wasn't isolated to Micron. This was, a sell-off that was across three of the Fab Five. So we saw SanDisk down, Western Digital down. We did see Seagate and SK Hynix ADR. They were a bit more stabilized today. So the question is this intraday action that we're seeing right now for Micron, is this a sign of structural weakness for the stock or for the broader memory sector? And my answer for that would be a definitive no. I think this is a textbook example of market positioning and sell the news profit taking after an extraordinary multi-quarter run and a strong earnings print that were dropped on the street from Nvidia yesterday. Investors clearly bought the pre-market action following that earnings print, and it allowed short-term institutional funds to liquidate long positions and lock in gains at the open. You see that in your screen clearly with that huge gap up right up to the right here. You can see the 968, a massive gap up, and then kind of driven right down in the first 20 minutes of trading. It drove it down to about 919. So that's what we saw today. But notice what happened once that initial supply was absorbed. Once we got to that low that I've highlighted on the screen here of 906, the lower prices, they brought in steady accumulation for the stock, driving it all the way back up about $30 from the low almost. So that was a really nice reversal that we saw in the afternoon, and the stock closed at 935 today. Now, in addition to just profit taking, I do think there was a little bit of probably fear and anxiety that came from the Nvidia call. In particular, when we heard that their CFO, Colleen Tress, when she directly cited tight memory allocations and supply constraints during their call, and she acknowledged that surge in memory prices is pressuring their gross margins. And that was a clear bullish flag for Micron. But I think there are a number of analysts and investors out there that probably pulled back some capital on those comments just because they fear that the hardware margins and that compression that we could see will cause hyperscalers to temporarily pace or slow down their server buildouts or demand pricing concessions from the memory providers. So we haven't seen that yet in today's market, just to be clear, but I think there are some underlying concerns that are probably causing Micron to just trade a bit slower today. But honestly, the fundamental metrics remain unchanged today. And in my opinion, I believe overall that the price action we saw today and what Micron experienced was a short-term positioning reset. But the physical market fundamentals behind this multi-year memory cycle, they remain firmly intact, guys. And I want to show you another sign of why these fundamentals remain firmly intact. You may have seen it yourself, but if you take a look at this article on TrendForce regarding Nvidia's supply commitments, they soared to $279 billion. And they also are launching a new Nvidia HBM, a custom HBM that is boosting bandwidth by 30% according to their data. So let's take a look at some of that, because I think the first piece is they're both really strong signs for the memory sector, to be quite honest. But NVIDIA's, the first one around their commitments, is a significantly strong sign. So NVIDIA's supply and capacity commitments, as disclosed in the second quarter in their earnings, jumped to $279 billion from $119 billion the prior quarter. That is being driven largely by memory procurement. NVIDIA is also taking a more direct approach to the memory crunch, unveiling a custom HBM solution that they're calling NVHBM, which delivers up to 30% higher memory bandwidth while cutting HBM power consumption by 15%. If you scroll through, this again is what Colleen Tress said, that surging memory and component costs are set to weigh on their profitability. They report that their gross margins are expected to slip to about 74% next quarter and down to 71, 72% before they finally settle in, I think, at around 73, they said, next year. Now, NVIDIA's supply and capacity commitments, driven heavily by memory procurement, total $92 billion for the rest of this fiscal year, followed by $87 billion in fiscal year 2028, which is calendar year 27, and $88 billion in fiscal year 2029. And NVIDIA expects the memory bottleneck to persist through at least fiscal year 2028, guys, which I'll remind you is calendar year 2027. So rather than treating just high memory costs as a temporary operational issue, NVIDIA is actually adopting a different approach by architecturally introducing a new design, or what I mentioned they're calling NVHBM. So let's get to some of that here. You can see it's NVHBM moves the memory controller onto HBM to unlock more compute. So they extend the company's NVLink Fusion platform with memory architecture aimed at boosting XPU performance while reducing power consumption. NVIDIA's NVHBM takes a different approach. It's embedding its custom memory controller directly onto the HBM base die using the same technology that they plan for future GPUs. And according to their data, it delivers 30% higher memory bandwidth and 15% lower HBM power consumption while freeing up 25% more area on the XPU compute die versus the standard HBM4E. So NVIDIA said that Amazon Labs is among the first partners set to adopt this technology. The two companies, they work together and integrate. They will work together in integrating NVHBM as well as NVIDIA NVLink in their as they scale up architecture together to improve performance and efficiencies across AI networks. So this is a huge announcement overall. And guys, in my opinion, this announcement from NVIDIA with their NVHBM is structurally bullish for the memory ecosystem long term. It carries mixed short-term margin implications depending on vendor positioning, though. And let's talk about a few of the implications overall. I think first, it pushes, on a positive side, it pushes higher value add per bit. So moving the memory controller onto the 3D stack, it increases the architectural complexity of the memory module itself. And that transfers design value from the host XPU manufacturer to the memory supplier, ultimately driving higher average selling prices and structurally expanding HBM gross margins. It also locks in long-term allocation demand. So standardizing NVHBM across NVIDIA's NVLink Fusion platform, it creates a unified qualification pipeline for the memory vendors like Micron, SK Hynix, and Samsung. It accelerates the HBM4 custom-based design pivot. NVIDIA is accelerating the industry-wide shift from pure commodity DRAM towards advanced foundry integrated memory stacks. And I think on the other side, if we look at kind of the bear and the bullish, it is a double-edged sword a bit from a margin perspective, because the only immediate friction that I see is capital expenditure for the memory companies. Producing custom NVHBM-based dies requires deeper foundry integration and higher R&D overhead compared to the standard HBM specs. Memory providers with tight CapEx constraints could face short-term margin compression during the yield ramp before the high margin volumes actually scale up. But ultimately, I believe that NVHBM solidifies memory as a core compute differentiator rather than a generic commodity, ultimately securing higher pricing power for memory providers throughout the AI infrastructure expansion. And most importantly, as you saw in the article, is that Amazon Labs is already set to adopt NVHBM to interface directly with their next generation Trainium chips via the NVLink Fusion. Take a look at this article that was on investing.com today. You can see AWS and Nvidia plan to deploy 2 million additional GPUs by 2028. We scrolling through some of the details, you can see here that Amazon Web Services and Nvidia today, they announced today an expansion of their partnership to deploy 2 million additional Nvidia GPUs across AWS's global infrastructure by 2028. The deployment will include Nvidia Blackwell Ultra, Rubin, and Rubin Ultra GPUs. The company's plan, they have a few ventures together ultimately. The company's plan to build AI factories for the U.S. government, including 100,000 GPUs on the secure AWS infrastructure. They're also working together to bring Vera CPU-based infrastructures to AWS to support AI workloads requiring high-performance CPU compute alongside accelerated infrastructure. They're extending the NVIDIA's NVLink Fusion with custom NVIDIA high-bandwidth memory technology, which gives AWS Trainium chips access to faster, more power-efficient memory. So, guys, I think this piece, the reason I read this story, number one, it's a great partnership for NVIDIA and Amazon. But I think it also attacks the bear thesis that we talked about last night with OpenAI and Jalapeno, because now this is a second piece of evidence that is showing us that custom ASICs, whether it's Trainium or whether it's going to be the Google TPU or OpenAI's Jalapeno, they don't undercut DRAM and HBM demand by bypassing our GPU architectures. The latest data that we've seen now from both OpenAI and now from Amazon here, it disproves that assumption entirely. Custom silicon is not replacing the memory opportunity. It's actually expanding it in today's market. That's the most interesting part of this story, is that it clearly shows us that Amazon is not choosing between NVIDIA GPUs and custom silicon. It's actually scaling both at the same time. So this is just another enormous kind of opportunity in the market. It's another enormous memory procurement in this 27-28 timeframe. And it's arriving precisely at the time that HBM supply is already so constrained in the market. We know 2027 is going to be the worst year yet, according to the executives from SK Hynix, from Samsung, as well as Micron. All of these paths that we're seeing right now have one thing in common, whether it's Nvidia GPUs or it's custom silicon. They all have one thing in common. They require dense, high bandwidth memory stacks. Significant opportunity for all the memory providers. And now let's take a look at the supply side, because we talked about how constrained it is. I want to show you a key update on the supply side and why it's telling us that the relief that the market needs is not coming anytime soon. If I jump over to this article that talks about essentially SK Hynix and the fab that they're breaking ground in Indiana. I love this story for a couple of reasons. One, it shows the investment here in the U.S. It's about $4 billion investment. It's bringing a significant amount of jobs here to the U.S., but it is also bringing the HBM kind of war here to the U.S. We'll not only have Micron, fabricating HBM on U.S. soil, but now SK Hynix will be as well. They have a significant commitment overall. So let's walk through some of the details just to show you that we are going to continue to be constrained in 2027. That supply is not going to get here in time to meet the needs in the market. If you scroll through, you can see that South Korean chip maker SK Hynix said on Thursday that it plans to begin volume production of its next generation HBM4E chips at the Indiana facility in the third quarter of 2029. So they're breaking ground right now. It's a $4 billion project, but they also went on to say the chief executive in his comments said, and I have it highlighted here at the bottom of that first paragraph, that the memory chip shortage will persist through the end of 2030. It's a $4 billion project and marks a major expansion of SK Hynix U.S. operations as surging investment in the AI, artificial intelligence, drives demand for high bandwidth memory, or HBM. The chip maker seeks to bring their production closer to the major customers here in the West, such as Nvidia, Microsoft, Google overall. And their executive went on to say he sees no clear signs of the memory downturn and any eventual slowdown to involve moderating rather than falling off sharply. He doesn't see demand falling off sharply. It'll come kind of slowly overall, but he also is not concerned about the outlook beyond 2030. So that's an interesting piece, because I know I've seen everything where I even share on this channel, like out through 2028, we are going to be significantly constrained. And now it does look like the fabs in late 28, 29 will bring more supply on board. But according to the SK Hynix executive here, he doesn't have any concerns about the outlook beyond 2030. What this is telling us, if you look at it, that this relief is not coming anytime soon. They are confirmed that their mass production for this facility will not begin until the second half of 2029, explicitly stating that the structural memory shortages could persist all the way through 2030. So those are clear signs we saw in the market today. And we kind of bring it all together in this video. I think the one piece that I would say in closing is today's Micron's reversal today, it doesn't prove that the correction is finished. This stock could move down more. We're seeing a bit of a pullback in the after hours right now. So it is an interesting price action we're seeing right now, particularly with all the strengths of the demand that we have in the marketplace. But I think what we did see today across the board is that there is an extraordinary disconnect in the market between price action with the stock and all the fundamental signals and demand signals we're seeing, because Nvidia is committing hundreds of billions of dollars to secure future AI supply. AWS is simultaneously scaling Nvidia GPUs and custom silicon right now in the market today, creating a massive demand for memory as well. And advanced memory remains completely constrained. It will remain constrained with no concerns, according to the SK Hynix executive, out to 2030. And that new data, what the new data is showing us on the fabs that are being built at any meaningful new capacity, it's going to take years, not quarters, before it arrives to the market. So all of those fundamental demand signals, what the disconnect we saw is that Micron actually dropped $60 below its pre-market high today. That's the opportunity and the risk we have with this stock right now in the marketplace. I think if I look tomorrow at the opening bell, we could see a gap down. But I think if Micron holds that intraday low we had today, which was 906, and it begins to start to reclaim some of its breakdown, I'll treat this as evidence that the market just flushed positioning while the fundamental thesis remains completely intact for the stock. Now, if we break below 906 tomorrow, then I will not rationalize that. I think we will reassess our thesis overall in the channel. But the fundamentals tell us right now what we want to own. The tape tells us whether the market agrees or not. And today, it is clear that those two signals are fighting each other in the market. Guys, let me know your thoughts on what you saw today. Drop your comments below. Make sure you hit that like button. Make sure you subscribe to the channel. And I'll see you on the next video after the market close. Have a great night.